Good morning and good afternoon, everybody, and thank you for joining today's Westwood Wildcat webinar, where we'll be looking at high impact exploration activity in 2025. My name is Emma Looms, and I head up the sales and marketing team here at Westwood. And joining me on the call today, we have our UK-based team of Wildcat analysts who are each focused on their own region. And you can see some familiar names and faces on the slide there. During the session, we'll start off by looking at a review of 2025 so far in terms of activity and performance, as well as the key hits and misses so far this year. The remainder of the session, the team will then take us through by region what activity is planned for the rest of the year, as well as the key wells to watch out for. A quick bit of housekeeping in terms of definitions. Everything we look at today is high impact exploration, and the description of which you can see on the slide there. On the next slide, we've got our standard disclaimer. We do ask that the purpose of today's webinar is for you to get some key information from the report, but we do ask that before you repurpose or share any information from today's call, that you do get in touch with us and ask for explicit permission to do so beforehand. Thank you very much. Before we jump into the presentation, I'll just take a couple of minutes to remind you and to update anybody who's new this morning about Westwood, who we are and what we do. We're a provider of specialist market intelligence solutions across the energy industry. We help our clients with their technical, commercial and strategic decisions through our variety of subscription-based products, reports and insights, as well as our bespoke consulting offerings. Our solutions span from exploration and production through to energy transition, as well as offshore and onshore energy services. And you can see the list of our products on the right-hand side of your screen now. Today's call will be very much focused on our global exploration and appraisal offering, Wildcat. I know many of you on the call will be familiar with Wildcat and what it is, but again, a quick reminder, it's a go-to source for people who want to improve exploration performance across the industry, monitor activity, and understand trends and what's going on in this area. For our clients on today's call, the report that this webinar is based on is available on the Wildcat app in the library. So please do log in and take a look and read through that report, where we'll cover every well that we go through today in much more detail, as well as a variety of other wells that we don't have time to include in today's session. So please make sure you access that and take your time to absorb it all. If you're not a client, but you have any questions about the report or would like to purchase it, then please do get in touch with the sales email address that's on your screen at the moment. With that, I will hand straight over to Jamie, who's going to kick us off looking at activities so far in 2025. Thanks, Jamie.
Thanks, Emma. So I'm going to start off with getting straight into the hits from the high impact drilling program in the first half of the year. So what I'll do is a quick trip around the world and give a little bit of commentary about the key discoveries made so far. So if we start with North America, we saw the Sockeye 2 discovery drilled by Armstrong. So this well encountered a good quality Paleocene age sands and flowed at 2,700 barrels of oil per day. And this was really significant in extending this topset play much further to the east in the basin and into younger topsets, whereas the Pikka discovery was in the lower Cretaceous. Sockeye was actually a Paleocene discovery, and the JV has reported that the reservoir quality appears to be better than the discoveries that were made further to the west. If we move to the US Gulf, BP announced the Far South discovery in the western area of Green Canyon, just north of the 2015 Pliocene Hopkins discovery. So BP reported that the Far South well encountered high-quality Miocene reservoirs in both the initial well and in the sidetrack, but there was no detail given publicly on pay or volumes. So it does look to be potentially commercial at the moment, but it probably doesn't look quite as big as BP were hoping for prior to drilling. If we move to South America, we just saw a single potentially commercial high-impact discovery, and this was for Petrobras in the Santos Basin. So the Tortuga Leste made an oil discovery in the pre-salt on the Aram license, and this discovery was made on the northern part of a megastructure that was proven by the 2021 Curaçao discovery, and this drill out looks to be confirming the multi-billion BOE potential scale of in the Aram license. In Europe, we saw quite a rare high-impact discovery offshore Poland at Wolin East in Upper Permian zechstein carbonates. So the operator here initially reported promising results back in February, and just a few days ago announced that it had encountered a 62-meter hydrocarbon column with excellent quality reservoirs, and they've reported the discovery at about 195 mmBOE, but this will definitely require some appraisal. In the Western Black Sea, TPAO extended the Pliomycene clastic play further to the west with the Goktepe 3 well after the Goktepe 1 and 2 wells were unsuccessful last year. So TPAO has reported 2.7 TCF for Goktepe 3, which we're assuming is probably a high case, and we're holding about half of that at the moment. In the Middle East, we saw high-impact discoveries onshore Saudi Arabia in the Cretaceous Wara Formation, and then there was a discovery for Occidental onshore Oman at Bakir, which has actually already been tied back into existing infrastructure. Offshore Vietnam, Murphy made the Hai Su Vang discovery in the Kulong Basin, here encountering 113 meters of net pay and flowing at 10,000 barrels per day. And this is a really nice example of a high impact discovery in a more mature play, with Murphy reporting that it's in line with the 170 mmBOE mean that it reported prior to drilling. And last but not least, in the Orange Basin, we've seen two potentially commercial discoveries. So Brian will get into the Orange Basin in a bit more detail, but we saw the two discoveries this year both being made on the inboard of the SDR High. So Mopane 3X for Galp encountered light oil and gas condensates in AVOs 10 and 13, which previously both had not been encountered in the Mopane program. And in Capricornus, Rhino and Azul encountered 38 meters of net pay in the lower Cretaceous and flowed at about 11,000 barrels per day. So all of these discoveries are written up in much more detail on the Wildcat app, where we've looked at the reporting from the companies, the potential discovery sizes, the implications from the play, and the next steps for each of them. So if you're a subscriber, please do log in and take a look. If we move to the failures, unfortunately, the failure map is quite a bit busier than the successes, but really that's just the nature of high impact exploration. So you'll see a combination on the map of dry holes, non-commercial discoveries, and then there's also a few with question marks on as well. And really, we're just waiting for more information to become available here before we determine commerciality. But based on past experience, we probably wouldn't expect more than a couple of these to move onto the commercial success slide. So we don't have time to talk through all of these in detail, but if we just pick on maybe a few key failures, if we stick with the Orange Basin, we've seen 4 commercial failures this year, including 3 in the outboard area at Kapana for Chevron and Tamboti and Marula for Total. We've also seen quite a disappointing year offshore Norway, with 5 high-impact wells being drilled, 4 of these actually coming in dry, and then a non-commercial gas discovery at Elgol. In the Eastern Med, we saw 3 really key wells drilled, so 2 in the Herodotus and then 1 offshore Cyprus, but unfortunately none of these look to have made a definitively commercial discovery at the moment. And then finally, elsewhere in the world, we saw some really interesting wells drilled offshore Colombia for Petrobras, which we're still waiting for results for, and for KNOC offshore South Korea, which looks to have been dry. So again, all Wildcat clients can read much more about these wells and what they mean for the plays, basins, and companies in much more detail on Wildcat. So now if we look in terms of stats, we saw 37 high impact wells completing in the first half of the year, and we'll get into the projection for the rest of the year on the next slide. If we look in terms of success rates, we've seen the commercial success rate at 27%, which is pretty much in line with the 5-year average. And for reference, this is much better than we saw if we look back 10 or 15 years ago, when the commercial success rate actually averaged much closer to 20%. In terms of volumes, there's been 1.8 billion BOE of commercial resource discovered across the 10 high impact discoveries, which would put us at around a third of what was discovered last year in terms of resource. And really, this is due to the lack of any giant discoveries being made so far this year. So we have seen some significant discoveries in the Orange Basin in Turkey and Brazil, but these are really in the kind of low hundreds of million BOEs, and we just haven't seen anything in the billion BOE scale so far in 2025. So now let's take a look at our projection for the rest of the year. So we had been looking to the end of June, so the first half of 2025, but we've updated this actually to show to today, where we're towards the end of July. So 41 wells have been completed so far. We've got 20 high impact wells currently drilling. There's a further 13 that are firm with a rig contract already signed, and then a further 5 that we'd expect to be drilled by the end of the year once the rig schedule's announced. So that all in all would take us to just under 80 wells to be drilled by the end of the year, potentially surpassing 2024, but it doesn't look likely to go above the 83 that we saw in 2022. In terms of play maturity, we are expecting frontier exploration to actually be at its highest level since 2019, with 24 wells being drilled. But we can see in terms of emerging plays, the industry looks to be quite opportunity constrained in terms of emerging plays, which was actually a key message in our State of Exploration report published back in May. And we're probably going to only see about 20 emerging play tests this year, and that's down from 34 just in 2022. And then finally, if we look in terms of companies, so this is looking at any partners in these high impact wells, not just the operators. We can see that Qatar Energy is going to be the most active high impact explorer of the year and should participate in 13 different high impact wells. Then we'll actually see Chevron and BP ranking in second and third, which is quite a turnaround, as these super majors had been typically the least active of their peer group, but really they've stepped up their high impact drilling programs. Petrobras is also worthy of a mention, and they'll be drilling wells both in Brazil and internationally as they look to get back into more international high impact exploration. And we can also see a few Norway-focused companies in here, as we saw that Norway has had quite a busy start to the year. So the next map is just showing where these wells will be located for the rest of the year. And for the rest of the presentation, we're just going to take a look at 11 of these in a bit more detail, bringing in a combination of regions, basins, plays, and companies that will be participating in high impact exploration for the rest of the year. So I'm going to start with the Bandit well, and then I'm going to hand over to Andrew to talk through South America. So Bandit is really significant in being potentially the deepest well ever drilled in the US Gulf. So the figure on the right-hand side shows the TVD depths for wells drilled in more than 400-meter water depth since 1975. And we can see the permitted depth for Bandit would at just over 12,000 meters, or about 40,000 feet. And this would make it the deepest well ever drilled in the US Gulf, beating the record that was set by Cobalt at Ardennes back in 2013, which is about 30 kilometers to the southwest. So this will be drilled by Occidental, who will be partnered with Chevron, who's farmed into the deeper part of the license below 20,000 feet. And the well will actually be drilled from the same lease that contains the Constitution field, which produces from Pliocene reservoirs at about 4,500 meters depth. So Bandit's understood to be targeting both a shallower Miocene play as well as the primary target in the Paleocene Wilcox. So 50 wells have tested the Wilcox play since 2008. They've delivered about a 20% commercial success rate and an average discovery size of about 230 MMBOE. But due to the more expensive wells, the finding costs are actually about $5 a barrel, which are higher than we've seen in the Miocene play. So Bandit's located in the inboard area of the Paleocene play, where we've seen very high pressure conditions, and this has really caused some of the developments to be quite slow and quite challenging. But we have seen Anchor on stream about a year ago, Shenandoah first oil just on Friday last week, and Sparta and Cascada are now both post FID. So the industry's finally producing from some of these discoveries that were made about 15 or so years ago. So the key risks are going to be probably charge access and reservoir quality for Bandit, but this really will be a fascinating well to watch for the US Gulf this year, and it could potentially unlock more ultra-deep prospectivity. So with that, I'd like to hand over to Andrew, who's going to talk through a few of the key wells in South America.
Yeah, thanks, Jamie. So I'm going to start with offshore Suriname, and this is really a key area to watch in the second half of this year, with 5 high-impact wells expected to be drilled, and companies there looking to emulate the success seen across the border in Guyana. So 3 of the wells, Makor, Araku Deep, and Kori Kori, will be drilled outside of the Golden Lane trend, and these are looking to either open new plays or extend proven plays. And you can see the locations of these 3 wells here on the map. So the 2 we'll focus on today are Makor and Kori Kori. So firstly, the Makor well. This is operated by Total Energies with partners Petronas and Qatar Energy. And this is located in Block 64, which lies along the western margin of the Demerara Plateau. And that block is in water depths ranging between 1,200 and 1,500 meters. So this block covers what was previously Block 47, which was licensed by Tullow Oil. And they, of course, drilled the Goliathberg-Voltsberg North well, or the GVN well, here back in 2021. And that well targeted an Upper Cretaceous turbidite reservoir on the flanks of the Demerara High. And that was about 30 kilometers northwest of the Makor prospect. And you can see here on the 3D render at the top right of the slide here, the location or estimated location for the Makor well in relation to Goliathberg. And of course, the Goliathberg well was an unsuccessful well, and Tullow relinquished that block soon after that well was drilled. So according to the published EIA and the well section that you can see on the right-hand side there, the Makor well has a planned TD of about 5,180 meters, and it's targeting a carbonate prospect in what we assume to be probably Lower Cretaceous or potentially even Upper Jurassic stratigraphy. So this well was spudded back in May of this year with the Stena DrillMax rig. And so we are anticipating that this well will be reaching target depth probably in the next couple of weeks. Now, there have only been a handful of dedicated carbonate tests in the basin, and some of these recent ones we've shown highlighted on the map here in blue. So most notably is the Ranger 1 well. This was drilled back in 2018. And this well found oil in a Lower Cretaceous isolated carbonate buildup in the central part of the Starbrook license. Despite having been appraised by the Ranger 2 well, this discovery has remained undeveloped since it was made 7 years ago, although there are plans for the Starbrook JV to return to that discovery for a potential appraisal later this year. Other carbonate play tests in the basin have not delivered any material success, so this play is essentially a frontier play within the basin at present. So Jamie, if you could just click ahead one, here we have a Statsoli paleo environment map of the Lower Cretaceous. So this is from the Hauterivian to Aptian stage. And what we can see here is that during that time, the Demerara Plateau was dominantly a carbonate platform. And the Makor well that we can see there sits quite nicely in what's been interpreted as a potential carbonate buildup or reef just inboard of the paleo shelf edge. So reservoir, source rock maturity and charge access are the key play risks for the Makor well. The only other nearby well to have gone below the mid-Albian nonconformity was the A21 well. This was drilled by Exxon back in 1978, and it's about 35 kilometers south-southwest of the Makor well. And this well did encounter carbonates, but these were reportedly of poor quality. So the Makor prospect likely relies on an unproven Jurassic source rock, and this may only be mature and potentially well developed in the deeper waters in the northwest of offshore Suriname. Should this be the case, then charge access could be a key risk, potentially requiring long-distance lateral migration and also potentially complex migration pathways up onto the Demerara Plateau. So Makor is in a quite remote part of the basin and it's in deep water. And so a discovery here would likely need to be at least 500 million barrels of recoverable to have standalone commercial potential. We've seen that gas discoveries in the basin are proving challenging to commercialise at present, and so phase will therefore likely be critical for the progression of a discovery here into development. It's unclear just how much follow-on prospectivity may exist on the block, but Makor certainly, should it prove charge in the lower Cretaceous, then this would certainly be extremely encouraging, and particularly so for Shell, as they'll be looking to drill the Araku deep well later in the year, which will be testing a lower Cretaceous clastic prospect. So Makor definitely want to keep an eye on, and we'll hope to hear some good news coming out from Suriname over the next coming weeks and months. So sticking with Suriname and moving on now to the Kori well. So this will be drilled in shallow water block 5. So this is operated by Chevron in a consortium with QatarEnergy and Staatsolie. Shell had previously farmed into this license in late 2021 after the block was awarded in the shallow water offshore bid round, but they subsequently exited in 2023 and QatarEnergy farmed in for a 20% equity in 2024. So this well is going to be a key inboard extension of the Upper Cretaceous clastic play up onto the shelf in Suriname, where it is commercially unproven. So this is going to be the first real test in shallow water Suriname since the TotalEnergies and Apache JV extended the Golden Lane trend back in 2020. So the Cretaceous play is of course prolific in the deep water, and here reservoirs comprise slope channel systems. But Block 5 is moving into an unproven, largely aggradational terrain up on the shelf, and there is therefore significant risk, not just on reservoir presence and quality, but also risks on charge access, trap, and seal. So there have been some historic wells drilled in the vicinity of Kori. It's unclear if any of these wells encountered reservoir quality sands, but shows have been encountered in these wells. So Kori, I-23 and Ike-Kanti all encountered hydrocarbon shows in the Upper Cretaceous interval. Now, evidently, there is a proven charge system from the Kanje source kitchen in the more deeply buried central parts of the basin up into the onshore, because, of course, we have the heavy oil fields at Tambarejo. But clearly, charge access is still a key risk for Kori, as the prospect will likely require significant lateral migration along carrier beds. Charge pathways may also be complicated by the fact that there is local structuration within the Cretaceous above some of the pull-apart mini-basins, and you can see these shown here on that nice cross-section from Envoy. So the trap type has not been made public. However, Staatsolie has suggested that plays in the shallow water are predominantly stratigraphic and likely to rely on slope pinch-out or truncation by mud-filled channels. So the shelf area is more structured than further out in the basin, and this could potentially have implications for reservoir compartmentalization and deliverability. So Jamie, if you could click ahead one, we just have a nice colourful seismic line here, courtesy of CGG and TGS, and this is taken from the 3D multi-client survey acquired over the shallow water blocks. Now, unfortunately, we don't have a location for this line or know exactly what stratigraphy is being imaged here, but what you can see at the top of the line there are some well-defined top sets, and these could be the kind of targets that Chevron is looking to test with the Kori well. So this well is going to be drilled towards the end of the year, and success would undoubtedly stimulate interest in the shallow water, particularly given the more favourable economics relative to the deep water, and even a modest-sized discovery could potentially be commercialised. So there are a variety of play types that have been proposed in the shallow water by presentations made by Staatsolie. So failure at Kori is unlikely to write off prospectivity in the adjacent blocks. So again, another key well to watch in Suriname coming up later in the year. So finally, our last key well to watch in South America is Bumerangue. So this is in an underexplored part of the Santos Basin in Brazil, and this is in water depths of around 2,370 meters. So this well is operated by BP at 100% equity, and it's in a license that was awarded to them back in 2022. So this is quite a rare occurrence for an IOC to be drilling a deep water high-risk well at 100% equity in Brazil. So this well spudded at the end of May this year, and it's targeting a lower Cretaceous pre-salt play, pre-salt carbonates, and these are over a large basement high, which you can see here illustrated on the cross-section, and also the basalt structure map in the top right of the slide. So the prospect is reported by the AMP to contain around 2.4 billion barrels of oil in place. So recoverable resource is likely to be somewhere in the region of around 500 million barrels of oil equivalent. So this well is a significant play extension. It's about 60 kilometers south of the nearest commercial pre-salt discovery at Safinoa. Now, there have been a few wells drilled in the vicinity of Bumerangue. So 3 offset wells drilled by ExxonMobil between 2009 and 2011. And these are about 30 kilometers north of the Bumerangue license. And 2 of these wells did, in fact, encounter hydrocarbons in the pre-salt section, but these were deemed non-commercial, and Exxon subsequently relinquished the license on which they were drilled back in 2012. So Bumerangue, as you can see there on the map, is positioned in the outer rift domain, that purple zone that you can see trending there from northeast to southwest. And there's been only one potentially commercial pre-salt discovery from 15 exploration wells drilled there since 2008. And this was the Jupiter discovery back in 2008. But of course, this is a CO2-rich oil discovery. And the high CO2 concentrations there mean that it's essentially remained undeveloped. And that discovery's remained stalled for over a decade now. The Safinoa field, which is a little bit closer to Bumerangue, has reported CO2 concentrations of around 16%. And so BP will, of course, be hoping that if CO2 is indeed present, that it's more in line with Safinoa and more within a manageable range. Now, there is quite a thick salt section above the prospect, which you can see here on the cross-section. But that thickness is quite variable, so there will, of course, be the usual risks and uncertainties, particularly on depth migration and trap definition. Reservoir and source presence are similarly both key play risks in the outer rift domain, and the SAG sequence, which contains the source interval and reservoir, is generally thinner and less well developed compared with the outer high domain, where the majority of the big pre-salt fields are located. So should the well fail to prove up a mature oil kitchen, or equally prove up a gas-prone source, then this could potentially write off the area. Alternatively, a discovery in good quality oil in thick reservoirs could de-risk the adjacent prospects, and these have been estimated to hold combined around 2 billion barrels of oil in place. Now, as I said, this is deep water depths over 2,000 meters. So the standalone commercial threshold is likely to be at least 500 million barrels of oil. So clearly this well carries significant risk, but BP is well positioned here to capitalize on any success, given its large footprint here in this part of the basin. So now at this point, I'll hand it over to Brian to discuss some of the key wells in the Africa region.
Okay, thanks, Andrew. So we'll start with the Orange Basin offshore Namibia, and it's been another busy year in the Orange Basin with 6 high-impact wells drilled so far this year. And as Jamie had shown on the initial slides, this has resulted in 2 potentially commercial discoveries. So one at Capricornus for Rhino Resources, and another discovery for Galp within its greater Mopani complex. So the most recent well drilled in the basin was at Marula, and this was a well by Total Energies in PEL 56. And this well targeted a separate fan system to the south of Venus, and it resulted in a dry hole, which is understood to be due to a trap failure. And this could suggest more general risk to the stratigraphic trap potential in this part of the basin. So the well that we're going to feature here as a key well to watch is another well for Total Energies, and it's called Olympe in PEL 91. So this is the license that's just outboard of PEL 56 and therefore outboard of the Marula well. If you look at the map that's in the middle of the slide here, so this is an older map from Impact from 2021, and it shows what appears to be a large four-way closure down in the bottom left portion of the map. And this is likely a structure that's formed by faulted oceanic crust, and it could be charged directly from the underlying Aptian source rock. And it's this trapping style that makes Olympe unique, being a very large four-way closure compared to the stratigraphic traps that have typically been targeted in the basin so far. And this could offer the potential for stacked pay across multiple upper and lower Cretaceous intervals. And if there is a risk to the stratigraphic trap potential in this part of the basin, as highlighted by Marula, the structural nature of Olympe would alleviate this risk and could encourage further exploration in other structural traps in the distal parts of the basin. Now, the key risk here for Olympe is really going to be around reservoir quality. So PEL 91, this is the same license that the Nara exploration well was drilled in back in 2022. And Total report that well to have failed due to poor reservoir. And this will also be the key risk for Olympe. And you can see on the map on the left there that it'll actually be the most distal well in the basin to test the emerging Cretaceous plays. So we'll move out of the Orange Basin now, and we'll move north up into the Congo Basin in Angola. And our next well we've featured is called Quitexe. It was actually previously called Kionda, and it's a well by Azul Energy in Block 47 with partners Equinor and Senegal. So the Quitexe well will attempt to extend the oligomycine play further outboard of the prolific Block 31. And so this is a well that's within the outer fold belt on an outer basement high, which you can see an example of it within the cartoon section. And this area, despite the Congo Basin being a very mature basin, this area has seen limited drilling due to the extreme water depths of greater than 2,500 meters. You can see a seismic line in the bottom portion of the slide there. So this is from Senegal from a 2007 license round brochure. And it shows the potential for a very large salt-cored anticline, which could have multiple stacked turbidite sands within it. So the key risk here is going to be potentially low source rock maturity, as well as the effectiveness of the upper Cretaceous IABI source rock. And this would be due to potentially low substance and burial on the outer basement high, as well as uncertainty in the thermal regime due to the license being located on the continental oceanic crustal boundary. And I think this risk is highlighted by the Anjaba well, which was drilled by Total Energies in 2021. And it was drilled in a similar position in the adjacent Block 48 to the south. This well did encounter reservoir quality sands with only some potential hydrocarbon shows present. So this is really a key well for Angola. We have seen production really starting to dwindle in Angola, and Quitexe has got the potential to significantly extend the plays into the outboard trend, where we've seen actually Chevron recently pick up blocks 49 and 50 to the south, and is understood to be looking at similar plays. So we'll keep moving north in Africa, and we'll move north up into the Tano-Ivorian Basin offshore Côte d'Ivoire. And we've seen plenty of recent success here in a maturing basin that just a few years ago had really fallen off the radar. So this kind of rejuvenation of success really was kicked off by the frontier Lower Cretaceous carbonate discovery at Baleine that was made in 2021 by Eni. And Eni followed this up with another discovery at Murene, which appears to have extended the Jubilee play around 170 kilometers west from the core producing area in Ghana. Now, what's really interesting about Murene is that according to TGS, and you can see a nice example of a seismic line from TGS on the right, is that Murene is below the DHI detection window, which differs from previous unsuccessful campaigns in the basin that were primarily driven by chasing DHIs. And it's this discovery that really appears to have rejuvenated interest in the basin, with Petrobras, and also Murphy Oil all picking up surrounding acreage. So the well that we're going to highlight here is called Civet, and it's part of a 3-well program, which is going to be drilled by Murphy Oil starting in Q4 this year. So Murphy has described Civet as geologically similar to Morene, which is about 15 kilometers to the south. You can see that on the map that they've picked up 4 licenses, which are highlighted with the blue outlines, and Civet's in the smaller license to the west. So this was a block that was previously held by Foxtrot, who had interpreted a prospect within the block called the AB prospect. And Foxtrot had described it as Turonian to Campanian aged, DHI supported, and having about 1.8 billion barrels equivalent of in-place potential. And with regards to the AB prospect, the trapping mechanism appeared to be a combination of stratigraphic pinch-out and fault seal, and trap integrity appeared to be the key risk. Now, it's unclear if this is the same prospect that Murphy intends to drill. Murphy has estimated Civet at around 440 MMBOE recoverable. As I mentioned, Civet was part of a 3-well campaign. I won't go into details for the other wells, but the follow-on well could be the Caracal well, which Murphy has described as a lookalike to Baleen, and then followed by the Cobus well, which you can see is in a much more distal position, and Murphy is described as being more frontier and potentially testing 2 different plays. And it's worth also noting that Murphy Oil has inherited the non-commercial Paon discovery, which was made by Tullow in 2012. And you can see it in the central portion of the 4 licenses, contiguous license that they have. And if they do have a successful exploration campaign, this could have some positive implications for the potential development of Paon in the future. Okay, so we'll keep moving north and look at our final key well to watch in Africa. And this will be in the Eastern Med, thank you, and is a long-awaited test in the offshore Sirte Basin in Libya. So BP accessed the very large offshore Area C back in 2007. You can see it in the central portion of the map there on the right, or sorry, on the left. And any drilling in this license has been long delayed due to the political issues in country. So Eni farmed into the license and took over as operator in 2018. And the first well, called Matsola, is expected to spud towards the end of the year or possibly slip into 2026. So this is understood to be targeting Cretaceous rudist carbonate buildup on a rift-related tilted fault block. And you can see kind of an example of what that looks like on the cartoon section to the right. So the closest analog to this would be the Arus al-Bahar discovery, which was made by Hess in 2009. And it discovered around 1 TCF of gas in Cretaceous carbonates. And you can see on the regional seismic line, just below the map there, you can actually see Arus Bahar on the seismic there. It's quite it has the look of a carbonate buildup quite clearly on the seismic. So Arus al-Bahar is likely fetching gas from the hottest part of the offshore Sirte, although it's possible that the potential upper Cretaceous source rocks decrease in maturity and become more oil mature further to the north towards Area C, where Eni plans to drill. So the key risks here are well, it's very frontier. There's going to be lots of frontier risks, but I think the key risks are going to be around reservoir presence and quality, partly due to poor imaging below the Messinian evaporate unit. And again, you can see examples of that on the seismic line, where the imaging is washed out below the events within the Messinian, but also facies variations in diagenesis within the carbonates. So we've really seen activity picking up in Libya this year, obviously with the license round announced back in March. You can see the offshore licenses that are on offer highlighted with the yellow outlines on the map. It's worth noting that the licenses are expected to be awarded by the end of the year, and therefore the result of Matsola shouldn't impact the license round results. And there's also been a recent deal announced between TPAO and NOC for 4 offshore research licenses that are highlighted with the red outlines on the map. So here at Wildcat, we've recently published a very detailed report on the Libya license round and the prospectivity within each of the offshore blocks that are on offer, which is available to our clients through Wildcat. And on that note, I'll hand over to Joe to look at the Western Black Sea.
Thanks, Brian. So now we're looking at the Western Black Sea and OMV Petrom and NewMed's Vinek well in the Hanaspura license offshore Bulgaria, which is attempting to extend that Sakarya biogenic gas play into Bulgaria. So the license was originally awarded in 2012 to Total, OMV and Repsol, with several wells drilled by that JV, but both Total and Repsol exited. Most recently, Total in 2024 due to lack of commercial success. The turning point for the Western Black Sea basin more generally was in 2020 when TPAO made the Sakarya discovery offshore Turkey, which is about 50 kilometers southeast of the Hanaspura license. You can see on the map there. So the front of Sakarya discovery was in Miocene and Pliocene sands, and that was followed by the Amasra and Kaikuma discoveries, which are all within 50 kilometers of the Hanaspura license. But extending that Sakarya play has proved pretty challenging for TPAO. So since Sakarya, TPAO drilled 9 further exploration wells and making just 3 discoveries at Amasra in 2021, Kaikuma 2022, and then most recently at Goktepe 3 earlier this year. So focusing on Vinek, in 2024, NewMed farmed in, taking 50% equity for a carry on the first 2 wells in the license. So Vinek is targeting biogenic charged basin floor fountains of Miocene and Pliocene age turbidites fed from the Danube system. So reservoirs are thin and interbedded in combination or stratigraphic traps sealed by mass transport deposits, which you can see here in the schematic. It's understood that Vinek is testing the up-dip extension of the Kaikuma fan system, with that well less than 20 kilometers southeast of the Vinek location. But we do view that as exploration rather than an appraisal of Kaikuma. So if we look at the prospectivity and key risks associated with the Vinek prospect, so as I said, the well is targeting 3 Miocene and Pliocene reservoir intervals with a combined pre-drill recoverable resource of 3.3 TCF. In terms of key risks, trap integrity is reported by NewMed to be the key risk for all 3 of those prospects. Following the Vinek well, the JV reported in June that it would be testing the 3.3 TCF Crum prospect, as you can see on the map there, which is targeting 3.3 TCF prospect in that same play. The Vinek well is planned to be drilled by the Noble Globetrotter, likely in Q4 this year, and is expected to take around 60 days with an expected dry hole cost of 92 million. So overall, a really interesting well, attempting to extend that Sakarya play, which has proved pretty tricky for TPAO to date. So if we move on to the next well. So next up, we're looking at offshore Kuwait, where KOC are drilling a follow-up to the largest discoveries of 2024 with the Rikwa 3 well in a fairly underexplored part of the Gulf. So whilst there's been offshore exploration and production in the joint partition zone between Saudi and Kuwait since the 50s and 60s, exploration in Kuwaiti waters has been pretty sparse and no production has been achieved to date. So the latest exploration phase began in 2014 with a 2D survey that was carried out offshore Kuwait before a 6-well offshore drilling program was announced in 2017, but actually only finally kicked off in 2022. So the first 3 wells, Neketha, Jazza and July 2, tested lower Cretaceous sandstone and carbonate reservoirs, whilst the next 3 wells, July Rikwa 3 and Neketha 2 are testing Jurassic carbonate reservoirs. So the first 3 wells have all made discoveries, including the largest discovery of 2024 at Neketha. So it's pretty exciting to see if KOC can continue that success with the deeper play. So if we focus on Rikwa 3 now, which is reported by the ministry to be targeting Jurassic carbonate reservoirs. The Jurassic carbonate play is producing across the Arabian Gulf key fields such as the Marjan field, the Mahara field, North field offshore Qatar, but the Jurassic is untested offshore Kuwait, as you can see from that cross-section here. So offshore Kuwait is part of the Gotnia Mesopotamian subbasin rather than the Arabian Intershelf subbasin further south. So reservoir presence and effectiveness are going to be the key risks here, with primary porosity in the range of 5% and permeability in the nanodarcies, and reservoir quality is really controlled by secondary porosity from fracture networks. So the trapping mechanism at Rikwa 3 hasn't been reported and is not that clear. So KOC have recently presented the potential for reworked Jurassic rainflow deposits within stratigraphic traps offshore Kuwait, whilst stratigraphic pinch-outs on the margins of the Gotnia Basin have also been presented as potential traps. So it's quite interesting to see some strat traps being targeted in this basin. However, given that the well is being drilled on 2D seismic, trap definition and integrity are going to be also key risks, especially if the stratigraphic trap is being targeted. So the well was spud in June earlier this year by the Oriental Phoenix rig and is likely to take around a year to reach TD. Once KOC finished this initial 6-well campaign, it's planning a second phase, likely to begin into the end of 2026, which will include new acquisition of a new 3D survey and an additional 6 to 9 exploration and appraisal wells. So some really interesting wells being drilled offshore Kuwait, and good to keep our eyes on that. But next, I'll hand over to Jamie Higdon to talk about Southeast Asia.
Thank you, Joe. Yeah, so the theme for high impact exploration across Asia Pacific in 2025 has been a real end member mix of testing mature plays in very mature basins, such as the Kulong Basin, the Sarawak Basin, and the Kutai Basin, versus real frontier play tests in frontier locations, including South Korea and India. We've only got time to focus on one regional frontier well in the second half of the year, that many will be following, and that's the Mailu-1 well, which is located in the deep waters of the Papua Plateau in Total Energies block PPL 576 in the easternmost offshore Papua New Guinea area. So this prospect has been drill ready for several years and has been covered before, but has finally got a rig contract in place for the year end, and that follows the farm-in of Petronas last year for 50% equity in the license. And Mailu is a billion-barrel oil prospect, which is a rarity in Asia Pacific, both in size and phase. It's a post-drift Eocene carbonate buildup on a large basement high, located on the northern passive margin of the Coral Sea back arc basin, which opened in the Paleocene. And the prospect's over 500 kilometers southeast of the nearest hydrocarbon discoveries in Papua New Guinea, and almost 2,000 meters water depth. So in terms of the prospect, the presence of a new, as yet unproven late Cretaceous Synrift marine shale source rock is required for the play, and is a key risk. Charge could come from the adjacent small half graben, but this could be limited or immature, depending on the phase here. Or the charge could come from a regional kitchen in the Torres subbasin 4 deep, which is over 50 kilometers northeast of the Mailu location. And charge access via long distance lateral migration from the Torres 4 deep is also a risk because of the earlier Paleogene succession carrier beds. Certainly onshore, that succession is predominantly deep marine marl and shale. But there is an active onshore oil seep, and drop cores above the Torres Basin kitchen indicate that there is a potential active petroleum system. So there is some positive news in terms of charge. Reservoir quality on the prospect is also a risk, particularly with the age uncertainty with no well control. But if the age is early Eocene, then there's certainly a time when the Australian plate was still at quite high latitudes and on the fringe of the carbonate factory zone. And also in the immediate aftermath of the Paleocene-Eocene thermal maximum, the decline in reef-building framework organisms could impact prospectivity and facies in a potential buildup of this age. But despite the high risks, this is a genuine basin opener, and the area can't be further de-risked without drilling at Myloo. And a success and the proving of a working late Cretaceous source rock opens up plenty of running room, both in lookalike carbonate plays, but also deep marine clastic turbidite plays, which are predominantly in the more proximal offshore fold belt foredate region, where both Total Energies and Laris Energy hold acreage. A gas or mixed phase discovery, which is a distinct possibility given all the uncertainties with the prospect, could prove more difficult to commercialize here, given the history of stalled gas developments both onshore and in the shallow offshore of Papua New Guinea. And it's worth mentioning that we are long overdue success at a frontier carbonate prospect in deep water. We featured 3 just in this presentation at Myloo, Matsola and Macaw, but there's been 24 play opening wells of this type completed since the Zor discovery 10 years ago, and only Baleine, which was a serendipitous carbonate occurrence, has made a commercial discovery in that time. So it'll be interesting to see if this trend continues. As I say, we've only had time to focus on a few high impact wells in the presentation today, and there are more in the report that's been published. And as you can see on this map, there are many more important high impact wells to complete this year. And we feature all of these in full detail on the Wildcat app. So I'd encourage you to look at those. So I'll hand it back over to Emma to close the presentation.
Perfect. Thank you, Jamie, and thank you to all our team this morning for your presentations. Thank you all for joining. If you do have any final questions, then feel free to pop them in the chat. But otherwise, I will just leave you with a quick reminder that we are hosting a series of events looking at the global offshore energy outlook, as well as a deep dive into the UK market on the 16th, 17th and 18th of September. And you can see the locations there. You can register for those events on our website, and registration will also be open for our Houston and Singapore events later in the year as well. Thank you all for joining, and have a good rest of your day. Thanks, everybody.